That's for you, Mike. All right, give it a couple more minutes for people to join, and we'll get started. Whoa, echo. That's better. All right, give it a few minutes so people can join, and then we can get underway. I don't want to do fresh analysis. This is more of a demo stream. Not necessarily, not really to show off. I mean, kind of, but more. I wanted to show everybody who's not in the group what you're missing out on, so you get your cheap ass in the group and stop asking me for free content, you cheapskates. I'm just joking, but seriously, I'm not. I want to show you how we were able to make the trades we made, how most of us in the group made an absurd amount of money overnight, last night, overnight, today, and how you could do it too. It's really not that hard. People who say that it's irresponsible to tell people it's easy because this is not easy, I hate that, because it really is easy. If you dedicate yourself, if you really dedicate yourself to learning, then it is very easy. If you don't, and you expect to just use like a signals group or something like that, and somebody tells you what to buy, then it's not easy. Then you're going to lose money, and you're going to put your money in my pocket by buying late, selling early, and I'm going to walk away with your capital. So it is very difficult if you don't dedicate yourself and spend the time it takes to learn. and become a skilled trader. All right, a couple more minutes and we'll get underway. Let me just do one more tweet just to make sure people get a chance to hop on. All right. Hopefully everybody has my indicator. If you don't, you can add each of my dynamics indicator from TradingView. I have if you're in the group, it's in the group. It's under the new members channel. But if you're not, you can just use my my pinned tweet, not the main pinned tweet, but on that thread, like the next tweet down. There's a link to TradingView, and you can add it to your favorites. Then you can use my indicator. It has 4-in-1. It has 3 EMAs and the cloud all in one. I'm not actually going to add upon it too. I'm going to see if I can integrate some aspects of my Stoke model as well. What was I just looking for? I think we got enough people. We can get started, but let me just let me check one more thing. Who thumbs down this stream? You're such a fucking loser. Whoever did, you're so gay. Like, who does that? Oh, let me join a live stream and immediately give it a thumbs down for no reason whatsoever, just to be a dick. Oh yeah, you're hilarious. Yeah, just keep doing them. It's so funny. It's fucking hilarious. You're just an absolute fucking comedian. What? It's not his fault. You brought him up that way. Sorry, your mom's under the table sucking me off. Let me just... You brought him up that way. I know. It's rude. You should tell him. You don't thumbs down people's live streams like that for no reason. It's really rude. All right. Let's go through some shit. So what I wanted to do was show you guys essentially how we got into all these trades last night. So here's an example. Here's Link, right? That obviously went pretty well. I'm not going to go over the trades from earlier yesterday, although there were essentially two main entry points yesterday, earlier in the day and then last night. This was last night. Let me show you first, though, what I did with Bitcoin. Since Bitcoin kind of drives the rest of the market, it's good to go through the majors, because the majors really gave me an idea of when I should be entering alts, right? So one of the things you should get into the habit of doing is tracking Bitcoin and using Bitcoin as an overall indicator of directionality of the market in general, right? So if you're anticipating a bullish move on a couple altcoins, hold off on entering if you can. God damn it. My dogs are so annoying. Every live stream, dogs and babies. You know, shut the fuck up. Anyway, so sometimes if Bitcoin looks like it's about to correct, I'll avoid getting into altcoins, right? So that's a very easy thing that everybody can do. I'm sure most of you already do that. You use Bitcoin just as an overall general indicator of when you may or may not want to get into other trades. Now, there are plenty of altcoins that move independent of Bitcoin, and it doesn't affect it as much. But overall, it's an important step in the process. So looking at Bitcoin last night, well, earlier in the day, I had gotten into a couple different trades. Now, when we had that big dump in the morning, let's see, that was in the early afternoon. So what actually happened here was, so I was anticipating us moving up along the top of the cloud, and we started to do so. It actually looked like we were pushing up along the top of the cloud. Now, for those who aren't familiar, I'm not going to get into it much here. You could watch my other public videos. But with my Ichima dynamics, I have 5 dynamic support and resistances. And I call it Ichima because I use EMAs, 3 EMAs, and the Ichimoku cloud. So the top and the bottom of the cloud plus 3 EMAs give me 5 dynamic support and resistance levels. So in this case, we were riding one of those dynamic supports, the 55 EMA, and the top of the cloud. There was also a horizontal support right here, which is the 6740, which is an important aspect of my model as well. So I use horizontal supports, and I use my 5 dynamics. The reason why, you can see right here, we're moving along with that horizontal support, but as we start to move up, we no longer have that horizontal support to give us an indication of where we may hold and what we might use as a trend line. But I can extrapolate and essentially do a linear regression and say that this line from the 55 EMA, if that continues, if you do a linear regression, that would be a future trend line. So you could actually anticipate where trend lines will be in the future, and that's the benefit of a dynamic support. It's not static. It's not just a horizontal line on the chart that never moves. It's a dynamic support that will move as the price action moves. So right here, we had the top of the cloud, the 55 EMA, and the horizontal support. So we had triple Ichima confluence, 3 different Ichima supports providing confluence, leading me to believe it was going to be a particularly strong support zone. And it was. We were riding along that support for quite a while. Then we had that big scam wick dump. Now, at first, I was very happy about the breakout. I had another trend line, which I've since removed from the chart, but it was coming down like that. So when we broke out above that trend line, I was really excited. I thought that was going to be the start of a big breakout because I had anticipated a big breakout coming due to the 4 hours, which I'll get to in a minute. So I got excited at first, and then we dumped, and I said, all right, well, never mind. However, when we dumped and then we held right above the bottom of the cloud, I had gotten in literally right on that support. So we were holding right at the support I have here at 6680. There's a horizontal support right there and the bottom of the cloud. So when these supports failed and we got that scam wick down, I was able to buy over that 2-minute period. I did it, I was doing it live with you guys on Twitter and in the group. I told everybody exactly what was happening. We had that scam wick. We were sitting right on top of that support. And if you remember, I had posted how important it was to work on support and resistance. And that's the primary concept that you should master before you get into any other concepts with respect to technical analysis. If you're learning how to do TA, the most important thing you can learn is support and resistance. And that's why I was able to get into this trade right on a support. Not only did I immediately make money on the bounce and recovery back up, but that gave me an ideal entry for the for the additional moves that we would be getting later on. So this entire move all the way up, instead of entering in, around here, maybe you break out and you enter right here and you get a 5% run, I was able to get in all the way at the bottom, pretty much the lowest point you could possibly get into, which gave me an extra 3 or 4% profit on top of it, which is substantial when you're doing a leveraged trade on a major like Bitcoin. So, couple things here. Obviously, the importance of support and resistance. My Ichima model gave me some supports here, and I was able to work the trade from that angle. And then when we did dump, I was able to get in at another Ichima support and horizontal support with Confluence, and that gave me that incredible entry, which I immediately profited from once it bounced back up. You can notice when it came back down after it bounced back up, it got support right from the 99 EMA here, and then once we got above the 55, we were riding the 55 for a while. So the Ichima supports here were doing a great job providing me an ideal support zone that I can base the rest of my trades off of. Once you start to accumulate that much support under a particular area, then you can gain more confidence in the other trades you're getting into. So then I felt more confident to get into alts. Since we were holding so well, since we had such a strong support zone on Bitcoin, I know a lot of people were short. People were even making fun of me for being long here, and I joked and I said, don't concern yourself with the actions of trading gods. I was kidding around, obviously, but in reality, it's just because you don't understand what somebody else is doing, just because you don't have the skills or the experience to know what another trader's doing and why, doesn't mean that it's a bad idea. It either means that you need to step up your game and learn more, or it means that somebody else is just using a technique you're not familiar with. It doesn't necessarily mean that it's a bad trade. That being said, I got in at the right time, and from that point forward, we pretty much never stopped going up. So that was how I was working Bitcoin. Now, one of the other things, after we got that big move up, we were riding this new trend line right here. Now, that trend line went back pretty much to the top since, 3 days ago, 4 days ago. So this entire segment here, we had this nice long trend line. So that trend line was another key zone. I tweeted about this as well. As we got up to this trend line and we were holding right below it, I said this is going to be an absolutely crucial trend line, especially considering the fact that the top of the Ichimoku cloud is right there as well, which was another Ichima dynamic resistance, right? So I had posted and said once we break out above the top of the cloud and we get above this trend line resistance, that's going to be huge. That's going to be an indication that we're getting a larger breakout because we're going to be passing a substantial resistance. A substantial resistance, which as it has it, would end up being a trend line support after it gets broken. So once we broke through that resistance, it becomes a support, and we start moving up from there, and again, never looked back. So there are several points throughout the process where Bitcoin was getting above new support levels, and every time it got above a new support, I would build my confidence more and more. So then I started getting into more trades because I knew that the overall market was going to perform well, and that would allow the altcoins to break out. Once I had that in mind, once I knew and I had this confidence that Bitcoin was going to hold and the altcoins were going to move, then I started diving into those alts. So let's take a look at some of the altcoins we got into yesterday, and I'll show you how we made those trades. So just going from the bottom, this is in no specific order. I'm just going to go through a bunch of my trades and show you what I was looking at the time. And in hindsight, what can we see now that you can apply next time? Next time you're looking for potential trades, imagine you're in a similar situation. Imagine we're looking at Bitcoin, it's breaking out, it's getting above some major resistances, thereby creating major supports, right? Because those resistances, again, become supports once we break them. Let's say we get to that point and now you're looking for some altcoins to get into. I'm going to show you what I use and how I do what I do, and this is some of the stuff you're going to want to look for in the future if you want to trade, using the techniques and models that I employ. So again, my Ichima model you're familiar with. One of the other very important tools I use is the stochastic oscillator. Now, the stochastic oscillator gives you an idea of momentum, and it allows you to anticipate reversals in momentum, with which almost always correspond with a reversal in price action. Just to give you an idea, if you were to go back and look, you could take a look at when the stochastic, it's a wave, right? It's pretty much a sine wave. So you have the crest at the top and the trough at the bottom. So if you go back and say, all right, well, here we're at the trough of the wave on the bottom. That's the bottom of this move. The top of that move is right at the top of that wave, right? So then it comes down and it bottoms out down here. And look where that bottoms out right there. And that's right down here. Whoops. So bottom's right there, which is right here. And then the stochastic goes up. It maxes out right here. Maxed out there. Reverses, comes back down to the bottom, pumps up here to the top, pumps up to the top, and then this long drawn out bleed down. Now when that happens, you don't have that strong association anymore where you can kind of predict it as easily, because it's a little harder to model at those times, and that happens. But when it is locked in, you can see every time it goes from bottom to top to bottom, you're getting these Stokes cycles that make it very easy to predict swings and reversal, right? So you can anticipate reversals using that tool. Now, it's not an end-all be-all. I always caution people, don't say, all right, well, we're bottomed out right here, and I'm going to buy right there. And then it goes in a huge pump. Well, now we're at the top, I'm going to sell. So you're at the top and you sell. Now, if you did that using just the Stoke model, you would have made 7% profit on that move using nothing but my Stoke model. That often lulls people into a false sense of security, and it causes them to think that they can make these big, huge, all-in trades using nothing but my Stoke model. And it's dangerous to do so because, like I said, it's not always locked in that perfectly. More often than not, it is. The strike rate on that particular model happens to be extraordinarily high. But when it's not, it's not. And you can really get hurt if you're getting into it with too much confidence, more than you should have. So I use it as a tool. It's a confirmation tool, or sometimes I use it as an indicator to tell me when I may or may not want to get into a trade or exit a trade. I did a video that I shared publicly about how I use that tool yesterday. I posted a video publicly on Twitter and on YouTube, and essentially I explained, well, I use multiple time frames. So now I'm looking at the hourly. So let's say we move all the way up like this, right? We push up and we get to the top of the Stoke right here. So now we're sitting at the top, and I'm thinking, all right, now I want to sell. What I'll do is I'll dive down into the lower time frames, right? So now I'm on the hourly. I'm going to go down to the 15-minute, and I want to see what was going on at 6 a.m. Let's go to April 4th. At 6 a.m. So that was right here. So if I'm looking at it right, this is that same period that I was looking at on the hourly. If I'm there and I decide, all right, I want to sell right now, if I dive down to the lower time frame and I check and I say, all right, well, I'm actually maxed out. The Stoke is also overbought on the 15-minute. That's going to be a good time to sell then, right? However, sometimes you'll look at the hourly chart and you'll see that the stochastic is all the way at the top. It's at the crest of the wave, and it looks like it's about to reverse. Then you go down to the 15-minute and you check it, and you see, even though on the hourly it looks like it's at the top and it's about to reverse, you go down to the 15-minute and you see it's actually still quite low. So in that case, there might still be potential for another move up. So right here, for instance, let's say the hourly started right around here. Right around here, right? So you get this move up on the 15-minute. So maybe the price is sitting right around here, coming up against that 55 EMA, and the hourly is telling you that you're about to get a reversal because the Stoke is maxed out right over here. But if you look at the 15-minute, there's still plenty of room to build up more momentum and go. So you may hold off and not sell, and you can get an extra 3, 4, 5% profit out of it. So I can refine my entries down, and that's how I get those extremely precise entries, down to within a couple pennies or a couple dollars to within a couple minutes of the bottom. And I can do that because I'm using different time frames with multiple indicators. And with my Stoke model, I'm able to look at the 15-minute, the 5-minute, and the hourly, and this is on short-term trades. I can look at those 3 time frames and refine it down to the exact moment you want to get in, the ideal entry. And that's how I do essentially what I'm showing you here. So take a look at this trade. This is when I got into the trade. I share this right here at this bottom, and you can see it immediately went up. So if you were to check, that is 0.3% from the bottom. Actually, it really wasn't, because when I got in, it immediately went up. So the bottom already hit and we started coming up, so I entered the trade 0.3% above the bottom, and then it never looked back. It immediately broke out and went up. So what was I looking at when that happened? Well, a few things. First of all, the Stoke was on the way up. We were building up momentum, but we weren't nearly close to the top or anything. If we were, I would have held off on entering. So if I was looking at a trade that was sitting right on a support and I thought, man, that's a really great trade, I want to get in, that's an instance where I'll look at the Stoch for confirmation. I could check the 3 different time frames, 4 different time frames if I'm using the 4-hour, and decide if it's the ideal time to enter. So in this case, it was. Looking at the Stoch, that was nice and low. I dove down to the 15-minute and I could see the same thing. When I originally got into this trade, we had just bottomed out, so the Stoch was pretty low on the 15-minute as well. I got into the trade right above a support. So right now I'm using support and the Stoch model together. I'm not worried about my Ichima model here because those Ichima dynamics aren't really in play where the price was at the time. I was primarily looking at this horizontal support, which held really well on that wick down. And then we had a bit of a range, so the support really went all the way up here to 2306. But it went from 2306 down to 2300. So that little range right there was a really strong support zone. I bought right on that support. I had the low RSI, I had the low stochastic, so all of my oscillators were lined up perfectly. That was the ideal entry. Since then, we broke out, went straight up, and never looked back. Right now, I have 5% locked in, so if we come back down, I'll walk away with at least 5% profit. And if we get up above 25, so essentially we got rejected right at this resistance here, like 25.30. If we can get up above that and close above it in 15 minutes, I'll move my stop loss up and lock in 6 or 7, probably 8%. Let's take a look at Ethereum. Ethereum was a beauty. So with Ethereum, I had a couple earlier entries that I must have taken them off this chart, which I usually don't like to do, because at this point we were already quite bullish. So this was a much later entry. It was obviously a great entry and quite precise, but come on. Let me refresh this page. Actually, I may as well show you guys the current trades that I just got into. I can show you why I got into those as well. So Ethereum is another good one. We had a great trend line there, so that's one of the things I was looking at. So we're seeing a theme so far. I focus a lot on support and resistance because what is a trend line? A trend line is another form of dynamic support and resistance, just like my Ichima model. So we had this support riding the 55 EMA, except for this dip down where we got held up at the 99 EMA. So we had this trend line on the bottom. We had this trend line coming down, putting us in the apex, right? We're forming an apex between the two trend lines, getting resistance here, getting support here. We also had support from the 55 Ichima and the top of the cloud. So we had Ichima confluence there with 2 of the Ichima dynamic supports giving us support. So I had a lot of confidence that that was going to hold there. We were going to move up along with the cloud and the 55 EMA, and sure enough, we did. When I entered here, the Stoch wasn't as relevant because in this particular instance, we were already really bullish and running for a while, so the Stoch was already quite elevated. That was the case, not as much on the alts, but certainly on the majors with Bitcoin and Ethereum. You can see the same thing with Bitcoin. We had the exact same configuration there, where the Stoch wasn't as relevant because it was just elevated the entire time. We were so high on the momentum side of things that we were going to keep pushing up regardless, and it wasn't as valuable as it normally would be, at least not at the hourly time frame. It became more useful as I went down to the lower time frames when I was trying to get that perfect entry. Let's take a look at Ethereum. I don't remember what it looked like, so let me go double check. So here, in this case, I got in slightly early on Ethereum, which is fine. You could actually see when I got in here, the 15-minute Stoch was still pretty high. If I waited just a little bit longer, I actually could have gotten in pretty close to the exact bottom. So if I had waited until I started to see that stochastic turn and begin that reversal, I could have gotten in down here, and that would have been an even lower, more precise entry. So you can see, right, if you follow that line down right to where we get that reversal begins, that's how I can refine it down so well. If I were to go down another step to the 5-minute, I could do it even further. In this case, it doesn't really matter because it's already bottomed out, but the same thing. There's the Stoch all the way in the bottom at the 5-minute, and that was the low. So I actually bought in up here. If you look at the 5-minute, at that point, we were pretty high and reversing on the 5-minute Stoch. So again, if I looked at the 5 and the 15-minute Stoch in the case of Ethereum, which again, it didn't really matter on this trade. I already had enough between the trend lines, that apex between that pennant, and the Ichima dynamics at the top of the cloud on the 55 EMA. All that stuff together with all those supports gave me everything I needed to enter this trade, and it was a very low risk entry. So I didn't need to refine it anymore. But if I did, I could have gotten in even lower by using that Stoch model. That's a perfect example of how valuable that actually is in cases where you do need to get that perfect entry. But this was under, it was under 1% risk. So I bought in, and this is my overall strategy. I always buy in just above strong support. My stop loss goes just below that strong support. I bought in right here. I used the 55 EMA, the trend line support, and the top of the cloud. So I had 3 different support structures between my entry and my stop loss, allowing me to only risk 0.95%. So if we did tank in price, I would have only lost 0.95%. But if we break out, I would make 20%. That's a pretty freaking ridiculous RR, right? So that was what I was able to do with Ethereum. Let's see, Cody. I deleted the last trade. I had a Cody trade down here, so I don't have to worry about that. Here's a good example of a current trade where I got into Cody like an hour or so ago. Now, most of the alts, if you go, you'll see, and I use 533 for my settings on the stochastic model. You have to use the same settings as me or this won't look the same. But if you take a look at like ETC or XLM, you'll notice we're very high on the stochastic. That's screaming at me that we have to correct. It can still push up higher, but I'm not going to enter a trade. So am I going to short? No. Even though we have the really high stochastic, that doesn't mean we're going to correct right now. It just means we are going to correct soon. But I won't get into a trade because of how high it is, because I know we're probably going to correct soon. But I'm also not going to short because we're so bullish that we're not simply coming back down. We're riding along the top of that overbought range. But if you look at a lot of these, Stoch's really high. The only few that I actually considered entering, I also considered entering ELF too, because the Stoch was low and it was starting to turn up. I was going to share a fresh ELF entry right here on top of the 55 EMA, but I didn't. But I was considering it, and that's why. The Stoch was low. We were starting to turn back up. Even though all the other altcoins have the Stoch really high, this one happened to look prime, and it was right on top of one of my Ichima dynamic supports after it bounced off the 55 EMA there. But if you look at the rest of them, they were all pretty damn high. So there wasn't really a great potential entry on a lot of those, just given how high it is. I didn't really see an opportunity to get into a lot of these trades. Some of them I still jumped into. But one of them that I did like was Cody. So I got into Cody because it was sitting right above this horizontal support right here. And I knew either that horizontal support would hold or the 55 EMA would hold. And sure enough, that 55 EMA is stopping me from getting stopped out right now. I'm risking 2% in change on this trade, which makes it a relatively high-risk trade based on what I've been doing lately. Most of my trades have been under 1.5% of late. So 2% in change is actually pretty high, but you can see this wick came down and bounced right off the 55 EMA. So I'm getting a lot of strong support from the Ichima dynamic support right here at that 55. I also have a relatively low Stoch, which hasn't began to reverse up, but if it does, this will end up being a great trade. If we can get into that in 9 minutes, if we can hold above the 55 here, and in 9 minutes we start to bounce up and you see the momentum turn on that Stoch oscillator, this is going to end up going down as a great trade. If the 55 fails here and I get stopped out, I'll take a small loss. Not a big deal. That's how my strategy works. I can take losses on these trades. I can get into something that is a little bit riskier. I only had one support. I showed you some of my other trades where, like I have here, the 99 on the top of the cloud are right here. Most of the time I get into trades where I have 2 or more supports in one place. So I have a really, really strong support zone between my entry and my stop loss. In this case, I really only have the 55 EMA there, so it's a riskier trade, but I can afford to take this loss. It's a small amount of money I'll lose if it does stop me out, and if it breaks up from here, I'll make a substantial profit. So I'm watching Cody for this. I want to see what happens. I'm going to set an alert down by my stop loss, so I just get a quick notification, so at least I'm aware that I got stopped out. I also want to set an alert above this candle, so if it bounces on the next candle in 8 minutes, I want to be aware so I can move my stop loss up to my entry, and that'll make it a risk-free trade. Once my stop loss goes to my entry, it's a risk-free trade. I can't possibly lose any money. I'm risking 0 capital at that point. OGN, I got into another trade here just an hour or two ago, shared that with the group. Again, right after reversal, we bottomed out on the Stoch. We started turning up. I got into the trade right above the bottom of the cloud on the 55 EMA. And sure enough, we're up 4.7%. I'm actually going to move my stop loss up on this trade right now, and it's going to become risk-free. So let me do that really quick, and then we'll get back to it. Okay. All right, we are good. Okay, so this is now a risk-free trade. I can't take a loss. I shared this with the group. Here, show you guys. So these are my trades from yesterday. I already sold most of these and got out of most of my trades, but I wanted to update it because a lot of people in the group are still in. So I shared where, like, I was already out of algo, but I said if I was still in algo, this is what I would do. And from my original entry, we're up 18% now. So depending on if you got into this entry, or this entry, and you can see each one, the bottom one wasn't as precise. Look at the last two, though. I mean, that was right off the bottom. This was right off the bottom. So those were very precise entries, and in each case, it actually lines up with the bottomed out stochastic reversal. But these are the updates I did. You can see on EOS, 8%, 15%, 10% minimum out of a... On Ethereum, I was up 16%. I said I'd at least lock in 10, 12%, move your stop loss up and lock it in. But these were the newer trades I shared with the group. So I got into ZIL, OGN, and Cody. I already showed you Cody, which is close to stopping out. OGN, I just made risk-free, and we'll take a look at ZIL in a second. But that was at, what, 12:47. So that was about an hour ago. So it only took about an hour, and that OGN trade is already risk-free in 1 hour. It's actually above the top of the cloud now on the hourly chart, which is a great, strong Ichima dynamic support. You could actually see, if you don't believe me about how well the cloud works, look at all the support on the bottom of the cloud here, right? Then we move up, look at that hard rejection from that wick at the top of the cloud. Then we finally broke through the bottom of the cloud, ran along the bottom for a while, got resistance from the Ichima dynamics at the 55 and the 99, pushed up into the cloud, ran across, got rejected from the other side, got rejected from the bottom, bounced back up, big wick, rejected from the top, support from the bottom, finally pushed through the top. So the top and the bottom of the cloud are extremely strong supports and resistances. Even before we broke in this time, it got rejected on this dump down. It bounced, right? That wick bounced. This wick bounced off the bottom. All that support on the bottom. There's a great example about how valuable the cloud is. You need to have the proper settings with my Ichima Dynamics indicator. If you download, or if you use my indicator from TradingView, it has all the settings pre-configured for the EMAs and the cloud. But one of the things one of the other aspects of my Ichima model is a couple of the principles about how the cloud works, which is once you break into the cloud, more often than not, you run across to the other side and test the other side. Then you usually get a rejection. So here we fell across, right? We bounced up to the top, got rejected, bottom, rejected, top, rejected, bottom, finally failed and broke through. And then again, broke into it this time, ran across to the other side, bounced off, ran across to the other side, bounced off, and finally pushed through the top. The cloud is a really crucial aspect of my Ichima model. But this is a risk-free trade. It only took an hour to get to that point, and now I can't lose no matter what. So ZIL, I am not risk-free. I never moved up my stop loss, but we did break out from this pennant a bit. We're coming back down, and we're testing that original entry right here. I got in when we broke through the top of this trendline resistance here on this formation, because once we got above it, it went from being a trendline resistance to a trendline support. We might actually come down and bounce off of that support again. So I'm going to watch another, 3 minutes left in this candle. It's either going to come down and bounce off of this trendline support and then move up on the next candle. It might actually hold right here and move up on the next candle. It could also fail and stop me out, but you can see this trend line support is providing me ample protection from my stop loss. My stop loss was only 1.9% below my entry, so the risk isn't very high, and I have some nice protection here because that means there's 2 or 3 more candles where it's going to be, it would have to break this trend line support in order to hit my stop loss. So I'm comfortable with this trade. I still like how the ZIL trade looks. When I did buy in over here, you can see we just started coming back up on the stochastic after bottoming out on the hourly, and I dove down into the 5 and 15 minute, and in those cases we just started turning back up as well. So I had some solid Stoch confluence in addition to the support confluence. Oh, the 5 minute was high, but 5 minutes not as relevant because you can go through a whole cycle. Well, the reason why I do multiple time frames too is you might see 1 or 2 candles right here, but within these 2 candles you can't see anything on the Stoch here. But if you look at this same period for 2 hours from, oh, this is the 15 minute. If you look at this same period from 11:30 last night to 11:45 to essentially 11:30 to midnight, in that half an hour, you can't really see anything on this one. But if you were to dive down to the 5 minute, you could probably see a full wave, like bottom to top, in that period because you get more candles for that same amount of time, so you get a lot more data. So that's why it's important to use multiple time frames. All right, I'm going to have to get going in a few minutes, so let me just show you a couple more of these things. So I got into Bitcoin a little while ago. My stop loss is 1.2% below my entry. Now, in this case, I wasn't able to use the stochastic or anything like that. I was getting in basically because we had a little support resistance right here, a horizontal support where all these candles got rejected. The body of these candles were holding at that same level, and then this candle was holding right there. So I got in on that one. We dipped down briefly, never stopped me out, and now we're moving up. So in this case, I didn't have the same benefit of yesterday where I had the reset oscillators. This case was more instinct than having like stochastic, and that's why I'm not getting into that many trades today. I don't have the indicators right now because most of them are so bullish. I will say we're definitely going to be correcting given how overbought all the oscillators are. If you go up to the 4 hour, 4 hours very high. You could take a look at what happened in the last several times that happened, right? So we happen to be so bullish on this one, right, where we actually kept pushing up even after we were maxed out on the Stoch. We got a tiny correction there. Well, I guess we had the scam wick right there, so oops, we had that big pump wick. So it actually does still still fit technically, but not as cleanly as it does here. You can see when you're getting to that overbought Stoch, you're relatively close to a drop, right? Sometimes it works really well. In this case, you know, nice drop there. In this case, that preceded a nice drop. In this case, it wasn't as big, but it went from, oops, it's still, you know, 6% drop. So we're getting to that point where the stochastic is overbought. It's definitely starting to get to that point where I know that there's going to be a correction relatively soon. I said within the next 2 days, but realistically, we're probably going to correct in the next 24, 36 hours at the most. I can't imagine it running that much further beyond that. That said, I don't really care. I'm still in a long here, and I'm still going to make money, even though I anticipate a correction, because I can get to that point where my trade is risk-free, and then it doesn't matter. Even though I do anticipate a correction, I can stay in a long for as long as I want and lock in profit by using my stop loss. And then once I eventually get stopped out, then I can dump and I can enter into a short. Now, looking at the short term on Bitcoin, there is a rising wedge here. This is a much smaller rising wedge. There's a much bigger one if you zoom all the way out, which I'm not going to get into. But I decided to ride this rising wedge because we're going to go up to the top. So now we're probably going to come back down. I don't know if we're done with this. We're so bullish, and the bulls are really pushing hard. There's not a lot of sell volume on the book, so we're not seeing a lot of bear action trying to push us back down. So the bulls are able to keep us up using their power without having to fight the bears as much. So I think we might actually get a bounce off of this trend line again and push up one more time before we might actually dump. So at this point, I'm going to move my stop loss to risk-free because even if we do come down here, that trend line, by the time we get there, is above my entry. So I'm going to set my stop loss to, actually, I'm going to make it just below my entry to like 70, 80. That way I'm almost risk-free, but there's enough room for it to come down just the tiniest amount. Maybe just where that wick came down before. I'll set my SL to like 70, 72 or something like that. I'm not going to rush to do that. I'll do it when we get off the stream in a few minutes. All right, so that's what I'm doing with Bitcoin right now. Now, EOS was a great trade. EOS, I loved this configuration. So we actually had two ascending triangles, both of which are bullish formations. So this is one of the things you should also look for, but this is a bit more advanced. I showed you how you can use my Ichima model and you can use the stochastic model to identify optimal entries to get in or out of a trade at the perfect time right before a reversal. That's how I get those incredibly precise entries that are less than 0.25% off the bottom. Now, once you start learning more stuff beyond support and resistance and the Stoch model, you can look for geometric formations like triangles, flags, pennants, stuff like that. It's harder to spot those things early on because it takes a while. You need to look at thousands of charts until eventually your eyes can just spot it and fill in the blanks, and you can just sort of look at a chart and see those formations. I don't need to have a horizontal line here and a trend line here. I just see it. My eyes see this chart, and my mind fills it in, and I can just see the triangle shape. That'll happen with time. Early on, you can't really see it because you haven't seen enough of them, so your mind doesn't really have enough of a baseline to build it off of. You need to kind of have that framework in your head. But once you get to that point, you can factor in stuff like this. So in this case, we had an ascending triangle, which is a bullish formation. We had a strong trend line support and a strong topside resistance here that was giving us a triangle formation. Now, ascending triangles are very bullish. They break out 80 and change % of the time bullish on a continuation pattern. It usually happens in about 2/3 into the triangle. So if the triangle started here, this is about 2/3 in. This is the exact time I would have expected it to break out. So once I spotted it, I immediately shared it with the group. I even shared this publicly on Twitter for free. So I got in right after this little dip. I noticed that we were moving up, but we had a quick little dip on the hourly Stoch. That was the perfect time to get in. We had a lot of strong dynamic support from the top of the cloud and the 55 EMA, and we were coming up on that trend line, or we were coming up on that topside resistance. That was the perfect time to get in. But what I also noticed, and the reason why I figured this was going to be such a big mover, is not only did we have this ascending triangle that you can see on the hourly chart, if you pull out to the 4-hour chart, you can see there's actually a second larger ascending triangle right here, right? So we now have an ascending triangle within an ascending triangle. Now, if you had the smaller ascending triangle, I would say there's some potential there. You can get a nice breakout for 4, 5, 6, 7% potentially. Once you have a larger ascending triangle that's using this much data and you're breaking out of both of them simultaneously, you can, in theory, run quite a bit more. And in this case, we were up probably, 14 and change? About 14%. So this was a pretty large breakout move. Yeah, I called it perfectly. I got in right at the perfect time. Now, one of the other things, and this is a really cool principle, you guys should pay attention to this. So, an ascending triangle, again, if you can buy right off of that trend line support, that's the best time to buy. So if it dips down, if it's bouncing off of this trend line support again, that means it's going to be a low. Because if it's ever going to get lower than that, that means that trend line support failed. So you're going to have a really great support to protect your stop loss if you can buy as close as you can to that bottom, to that trend line support, which is the bottom of the formation. So what happens when you're up here, get rejected from the resistance and come back down, but you don't get all the way down to the trend line. At this point, I got rejected from the top resistance here. We started coming back down. Why didn't I wait and try to wait until we got all the way down to the trend line right here, that support? Couple reasons. One, I didn't think we would get down that far because I have Ichima dynamic support from the top of the cloud, and I have the 55 EMA here. So I didn't think we would go any lower. I thought those supports would hold, but that's actually the key, and that's what I want you guys to notice, and that's what I want you to focus on in the future. One of the ways I use my Ichima model is you can actually create and come up with an ascending triangle, a bullish formation, even when there isn't one there. So normally you want to have 3 points of contact. So you're going to bounce off of that support, bounce off of that support, bounce off of that support, bounce off of that support. And that's how you create that trend line, by having 3 points of contact. If you only have 2 points of contact, it's not really a trend line. It's only connecting 2 points, right? So in this case, we had down here, over here, and over here, we had 3 points of contact. But shorter term, right here, it was actually an even smaller ascending triangle. So you could actually say, well, this is technically an ascending triangle too. Right there, right? Now you can see this if you go down to the lower time frames, but you don't even really need to, because if you'll notice, look at where this, if you do a linear fit, it's actually fit. This line is kind of going right along that top of the cloud, right? And the 55 EMA is sort of trending up in that same direction. So since the top of the cloud was actually trending up this way, even if the price was still here and we didn't have 3 points of contact, I could actually tell that in the future, and this is where I get my whole time machine thing, I can anticipate that in the future, we will have an ascending triangle there. So let me just try to come up with a way to give you an example. Let's say, because the way the cloud works, it goes out further than the price, right? So you can see the cloud is all the way out here, and the price is still right here. So it's a leading indicator. Let me see if there's another chart. So this is a good one. This one I can show you. Let's say the price is bouncing around right here, right? So this is say this blue line, which is my stop loss. Say that's a really strong resistance, right? And we keep hitting that resistance and getting rejected, bouncing off of the cloud, hitting that resistance, getting rejected, bouncing off of the support from the top of the cloud. You with me so far? We're bouncing off of this resistance, then we're bouncing off of this support, then we're bouncing off of this resistance. So say the price is still all the way over here, but in the future, I can see the cloud is going to be trending up like that, right? So that means that even though we're not there yet, the cloud is going to create a trend line support kind of like that. So even if the price action is still here, getting rejected, getting support, getting resistance, getting support, getting resistance, getting support, I know that in the future, we have a potential ascending triangle formation right here, where we're going to have, and it doesn't have to technically be an ascending triangle. What's actually happening in an ascending triangle is you're getting higher lows. The lows are getting higher as you move along because you have a trend line support that's going upward. That uptrend means that each of your lows are going to be higher, and you're going to have a stable, consistent top, right? So you have a resistance at the top and a trend line at the bottom, which is going to squeeze it into this apex. And as you consolidate within that apex, you essentially build up potential energy. And once you break out, you're releasing that kinetic energy, and that's how you can get large breakouts. So if you know that in the future you're going to have that trend line support, even if it's not there yet, even if you don't have bouncing off of a trend line, I could tell you that in the future we will have a trend line support in that direction. So even before any of this happens, I would tell you we're going to have an ascending triangle, or sorry, we could potentially have an ascending triangle in the future. So when I joke about having a time machine and all that, I'm half kidding around, but at the same time, it essentially is a time machine. I'm able to model and predict the future based on these leading indicators and how they work. And I know that in the future, we're going to have higher lows because we have a strong support. And if that support fails, then fine, it's no longer valid. But I can operate under the assumption that we're going to have an ascending triangle in the future, and that gives me an edge over everybody else, because nobody else is going to know that until it actually forms. So, something important that you guys should remember. Okay, let's look at like one or two more, and then I have to go. Okay, so Link, that's another great one. That was a really precise entry I got into last night. This was another example where I used the Stoch, right? So we came down, we got that early turn on the stochastic. We started turning back up, which is a really bullish sign. Usually you go all the way up, you're overbought, all the way down, you're oversold, all the way up, you're overbought. When you get certain types of formations give you a hint in a different direction. In this case, when you're coming back down, but you don't really dump that hard and you get an early reversal like that, that's a pretty bullish sign. So once we started to turn and we saw that reversal on the Stoch, I got in right then. What's the other important thing that we have here? Well, there's two of them. We have a horizontal support and we have the 222 EMA. That's another one of my Ichima dynamic supports. The 222 EMA and the horizontal support at 225 gave me confluence, right? So I had a dual support confluence there. Plus I had the stochastic telling me we're about to shift momentum back up again. So I got in at the right time. I ended up entering pretty much exactly at the bottom. I bought in here. My stop loss was only 1% below my entry, and I had a ton of support protecting my stop loss. I had the 222 and the horizontal support. There was a very low probability I would get stopped out, a very high probability I would make money on this trade, and sure enough, it broke out like a champ. And it's been running ever since. So at this point, there's 6.6% locked in right here. We're getting really close. Just like with all the others, we have a very, very overbought RSI. We have an overbought stochastic. We are going to correct, and we're going to correct hard. But when you're so bullish that the oscillators take a back seat to the price action, you have to ignore the TA to an extent. I'm not saying it doesn't mean anything. I can still tell you that we are going to correct pretty soon. but you have to ignore a lot of the TA. Like at this point, I would say normally, if this is all I saw and I didn't see that we were running along the top like this for so long, I would say, oh, it's time to short. I'm going to get into a short. We're beginning to cross over. We're starting a reversal. We're about to tank. I would enter a short right now, but I'm not going to do that because we're so overwhelmingly bullish that you have to take a lot of the technicals with a grain of salt. Okay, Alpha's another one I got into, again, right near the bottom. Similar situation. We had a shift in momentum. We started turning up. I had a lot of support from the 99 EMA, one of those Ichimoku dynamics. Also, the bottom of the cloud was right there, so we had a nice support grouping. XLM, I was playing around with some longs and shorts, but I never entered. I was considering a short at one point. Obviously, I never got in, thank God. So my ETC trade, I actually never bought back in after I got stopped out of ETC. Now, I also was in a few other trades that I must have deleted those charts because I can't find them anywhere. Now, BTT was another great one. I got in right when we were riding along the top of the cloud. We had this 99 EMA right here, and I was so confident it would hold. You can see how well it did, right? I mean, that's over from right here to right over here. That's 1 day and 21 hours. That's nuts. That's 45 hours in a row that the 99 EMA, that Ichimoku dynamic support, was holding incredibly well, right? That's beautiful. That's why I love my Ichimoku model so much. So you could have theoretically bought in every time it bounced off of the 99 EMA, and you would have accumulated quite a nice bag, and then it pushed up and broke out off of that. Again, the top of the cloud, more support, and the 99 and the 55 and the top of the cloud, all three together. Really strong Ichimoku confluence there. Great time to get into the trade. If I wasn't already in this trade earlier, I used the short tool by mistake. That's why it's red on the top. It was just an accident. Normally it would be the green on the top. But if I wasn't in this trade from earlier already, I would have absolutely bought in right here. Bouncing off of the bottom of the cloud. And 99 EMA is holding like a boss. We're kind of squeezed between the two. That's an optimal time to launch. Plus, you can see bottomed out Stochastic right here, right? Look at that. Stochastic bottoms out. We're oversold. I would have bought right there. I could have gotten in exactly at the bottom using that Stochastic model. So if I looked and I saw all this support and I thought, man, I want to get into this BTT trade, then I just look to get my confirmation. I take a look at the Stoch, and sure enough, we're bottomed out. We're oversold. This is the ideal time to get in. And that would have been another one of those examples where I buy in pretty much right on the bottom. Same thing here. We get a correction, and we bottom out. We're oversold again on the Stochastic. I could have bought in right at the bottom of the Stoch, right there, and had a perfect entry all the way at the bottom before the next move up. Another one of those trades where I could have gotten an incredibly precise entry. All right. I think that was pretty good. Yeah, anybody have any questions? I got to go. I only have a few minutes, but anybody have any quick questions? I have a question for you. Why haven't you joined my group? It's awesome. I share all of my analyses, right? So I share every single trade I get into. That's on the majors, Bitcoin, Ethereum, whatever, and that's on all the altcoin trades I just shared with you, right? All these altcoin trades, I share every analysis. I discourage you guys from ever blindly following me. Nobody should ever blindly follow any trader. We all have our own unique risk tolerance. My risk profile is radically different than yours. It's a very personal thing. I have 2 kids and a third on the way, right? So I might not be able to risk as much capital as you if you're a college kid who doesn't really have any concerns and you come from money. Everybody has their own circumstances. So if I'm getting into a trade where I'm risking 3% of my capital, but I just made $20,000 in 24 hours, you probably don't want to get into that same trade that I'm getting into if you only have $5,000 to trade with and you have to pay your rent, right? So you don't want to blindly follow anybody. I discourage people from doing it, but I share every single trade I get into. So in theory, if you wanted to use my trades as signals, you could. It's just a bad idea, and I discourage anybody from doing it. Instead, I share my trades so you can follow along, you can watch them, you can learn from them, and you can replicate what I do. So I like to say, instead of just copying what I do, copy how I do it, right? That's why the premium group is so much better than the basic group for Flux Trading Group, because that includes education, live streams just like this, phone calls, live streams with me, any educational topic you want. Tons of past streams, educational videos. I'm working on some new stuff right now, including documents, a bunch of cheat sheets and worksheets to help you come up with a trading plan. There's a lot of great stuff in the group that allows you to learn how to do this stuff. Because if you just look for a signals group where you blindly follow another trader, it may work in the short term, but eventually you could potentially get wrecked. So between me, we're also, we have the Cryptomist. She shares all of her trades. And then Chart Vampire, he shares all of his trades. And he also does live streams and some educational content as well. He might not be as good looking or smart as I am, but he's also a really good trader, better than me. Well, at least with the longer term stuff. And he does educational stuff too, even though he's not as good as I am at it. Anyway, I hope you guys come and join. I love to teach this stuff. I don't know if you can tell, but I just talked for an hour straight. I didn't stop for more than 10 seconds at a time. I like the sound of my own whiny Jewish voice, but I also love to teach. I could do this shit for 5 hours straight without stopping for water. I love to do this. And if you join the group, I'd be very, very happy to teach you and mentor you so you can learn how to become a good trader as well. For those who don't know my background, I'm a noob just like you guys. I just happen to get really good at this. I got wrecked with everybody else after the 2017 pump. I was up a lot of money and I lost it all back. I lost a ton of money, and then I took out whatever capital I have left. I dedicated myself 12 hours a day or more to studying, training, researching, practicing until I was able to make money paper trading on a regular basis. Then I put my money back into play. I made back everything I lost and then some, and I've been trading for a living ever since. Anybody else can do the same thing. You just have to dedicate yourself, put the time and the effort into it, and you all have the potential to do the exact same thing I did. All right, let me see if there were any questions in the chat. The 533 Stoke are my settings, just like I have my own settings for Ichimoku Cloud and the EMAs. There's no why, it's just that's what works the best. I engineered the system on my own. It's trial and error and research, and I ran a bunch of models and tests and did some statistical analysis and identified essentially what will give me the highest probability of success, and that's what I do. What were you saying? Well, when I got into Zill, we were still just coming up on the Stoke, so we, in theory, could have ran up quite a bit before we started reversing. I don't know when anything is coming down. Like I said, everything is extremely bullish, and everything is going to be correcting soon. I don't know exactly when. I don't know how hard. I don't know how big it'll correct. I just know that it's all going to be correcting very soon, and it's going to be a pretty big correction. That's all I can tell you right now. Once we do start dumping, though, once we start to get that stochastic coming back down, once the momentum has shifted and we actually have a little bit of data that we can extrapolate upon, I'll be able to get a much better idea of where we may end up. But until then, I don't have that much that I can offer. Premium is $130 a month, but if you get multiple months, there's a discount. How much capital do you need to make a living? It's hard to say. I mean, you could do riskier trading and make enough money off of 5 or 10 grand a month, but what I was saying, I had mentioned it in a tweet, so just scalping the other day, just from using my Stoke model on the 5-minute, and check this out, let me show you really quick. If I were to use, just on BTC, dive down to the 5-minute chart, now, imagine each of these moves, right? So this move, bottom to the top of the wave, to the bottom to the top, right? Let's see what we got. Bottom to the top, 0.7, so it's 0.8%, right? So then you short, close the short down here, that's a 0.5% profit, right? Bottom is right here, you go long, right there to the top of the Stoke, follow the dotted yellow line down, that would end it right here. 0.65 on the way up. And then you short, 0.4 on the way down, so we're bottomed out on the Stoch. Bottom to the top would end up like that. 0.8 on the way up, longer drawn out on the way down. So if you were to just use, and again, I don't want anybody to only use my Stoch model. It only works well when you're using it with other models, right? It works as a great confirmation tool and stuff like that. But you could, in theory, just with $10,000, trade with 10x leverage on 0.5 to 0.8% swings on Bitcoin like that and make $1,000 a day. You could do that with $10,000 in trading capital. Now, there's risks associated with that. So if you were to try to do something like that, but take on less risk, you could do it. What you would do is you wouldn't trade with leverage, or you would trade with just much less leverage. You would do it based on the 15-minute chart, because the 5-minute chart, those Stoch swings, right? Each Stoch cycle from the bottom to the top to the bottom. One of those Stoch cycles on the 5-minute chart might only be 2 or 3%, or sorry, 0.2, 0.3%, maybe up to 1%, sometimes bigger, but usually they're pretty low, under 1%. On the 15-minute chart, if you do the same thing and you're trading those Stoch cycles, in these cases, from the bottom, right, to the top of that wave, you'll get a much larger potential profit. So in that case, you're going to get 0.8 on this one, the bottom of that wick to the top there, 2.4, bottom here to the top there. It would be, well, really it would be there, 1.5. This one here, so this local bottom, roughly there to that top, 1.3. That's on the 15-minute. Now, some of them are even bigger than that. Sometimes you'll get much bigger swings like this, right? There's a 2.8. Now, if you go up to the hourly chart and you use the Stoch model, we're talking about 3, 4, 5% on each Stoch wave. Then you're doing the 4-hour chart where you're getting 5, 10, or 15% every time you get one of those Stoch cycles, right? So depending on which time frame you're looking at, you can control how much profit you're going to get, but it's also going to affect how much risk you have to take on. But if you find the right marriage between risk and reward, you can limit your risk and make enough money to trade for a living, and you would really only need to have probably $10,000 to do it. That's just one way of doing it. The other way of trading for a living would be to swing trade. If you swing trade, you're taking on much lower risk to an extent. You're not doing high frequency trading. You're going to be doing trades that last much longer, but you're going to be taking more risk on those individual trades. So there's always going to be a trade-off. If you want to figure out the best strategy for you, there's a lot of things you can consider between ways to mitigate your risk. And if you're in the group, obviously, as you guys know, you can just DM me, we can hop on the phone and talk about it. We can come up with a strategy together. But everybody has to come up with their own individual strategy. It's a very personal experience because only you know exactly what your goals are. Only you know exactly what your risk tolerance is. All I could do is kind of give you some direction based on my experience coming up with my own risk profile. Once you have that profile locked and you know exactly what you can and can't do, it'll help you develop the best strategy for you. Once you have that developed, the most important step you can take is to paper trade. If you take out your money from the market and set it aside, you can take a week or two in paper trade and try a couple different techniques until you find what works for you. Then you can put your money to work for you in the market. That way you're not learning on your capital and risking losing that capital, because you need every penny of that capital when you're going to be trading it to try to trade for a living. You can't risk losing it now just to be able to practice and figure it out. That's why paper trading is such a great tool when you're trying to learn. All right, was there anything else? I have to update the website, but fluxtradinggroup.com, there's a bunch of info on there, but I need to add get the Cryptomist, her sections. I have to add description to that. The website's definitely outdated. Yeah, all right. I don't see any questions, but if you guys do have more questions that I didn't cover, hit me up on Twitter. How about this? The post where I posted about this live stream, use that thread and put any questions you have on that, and I can follow up with you guys. All right, thanks for stopping by. I appreciate it. This is a good one. If you guys do have follow-up questions or any of the topics I covered, if you want to learn more about it, let me know. I'm not going to give you any more advice. You're going to have to join the group and stop being a cheap bastard, but I'd still like to know what topics you like to learn about so I know for the future. All right, guys, thanks for stopping by. I will see you around. Adios.